Welcome to UK Finance Digital Innovation Summit 2020. I'm Sue Rossiter, Principal for Mortgage Regulation at UK Finance. Now in its third year, the summit is gathering industry experts to explore how we reimagine financial services and to discuss issues such as the role of emerging technologies in protecting consumers, how transparency can be increased, and how legacy systems can be overcome, among many others, across 7 content streams featuring the innovators and game changers that are reimagining financial services. This session will form part of the mortgage technology stream, and we'll be discussing how established lenders can lead the way with digital disruption, the digitalisation of the sector during 2020, and lessons from adapting to payment deferrals, among many other topics around the mortgage innovation sphere. In today's discussion, in association with More to Life, we will be discussing developing a digital identity trust framework for the home buying and selling process. The mortgage industry has evolved at a rapid pace during 2020, digitising processes and opening doors for other innovations to take place in this sector. This panel discussion will focus on the potential for developing a digital identity trust framework to streamline the home buying and selling process for both customers and for lenders. Joining me today, I'm delighted to welcome some experts to join me for the discussion. Kate Faulkner is the chair of the Home Buying and Selling Group, and Stuart Young is the founder of ETIF Technologies. Just before I hand over to our speakers, I'll cover a few housekeeping items. We really encourage you to look around the virtual event platform, engage in sessions, visit our sponsors pages, and view our on-demand content, including our 15-minute Pioneer Zone talks. If you have any questions, please feel free to submit them, and a member of the team will respond to you in due course. Additionally, please feel free to search for our speakers to message them directly with your questions and also to connect with your peers. I'll now turn to our speakers. Thank you for joining us today, and would you each give us a quick overview of what you do and why you're interested in developing a digital identity trust framework. So Stuart, to kick us off, would you be able to give a bit of background on the work you've been doing with DCMS and the regulatory authorities on a shared digital identity trust framework?
Thanks, Sue. Today's actually quite an exciting day for us. Your timing couldn't have been better because our project officially starts today. And it's a 6-month project due to finish at the end of April. The background to this project, we started earlier in the year, in February of this year, looking at identity and a trust framework for identity. We did some preliminary work with engagement from MHCLG, Land Registry, the CLC, the Law Society and SRA. And what we tried to do is try to understand and work out, is the requirement for an identity trust framework, and very importantly, can it actually be done and can one be set up? That work highlighted to us that it could be done, and we started getting an understanding of what would be required to do that. So we started working now with DCMS and Land Registry, MHCLG and HMRC as government bodies. Look, and what we've done with them is understand what DCMS are trying to achieve at a UK policy level. So they're looking at a UK policy identity for UK PLC, whereas what we were looking at is looking at one sector, one vertical in that, which is home buying and selling, and how that could be aligned to government policy. So that starts to build the framework for a UK identity policy. So what we've now got is we've got ways of working and the agreements aligned with DCMS and their policy. So really nicely for us is this work will shape and influence the DCMS policy, and conversely the other way around. And this is the same with Land Registry and what they're trying to achieve. So all the work we're doing will be aligned to what they're trying to achieve in home buying and selling around that impacts them. So from a regulatory perspective, we've got brilliant engagement and agreements sorted out with them. And the brilliant opportunity for this sector is that it will help to shape that DCMS policy about what they're trying to do for the UK.
Stuart, the next question would naturally be, can a digital identity trust framework work for the finance sector, and what are the advantages for that for the financial institutions?
It can. You know, there's been a number of initiatives that have taken place in the past in your sector, if I can call it that. One of which was promoted by UK Finance, in which my colleagues were involved in. And in addition, there's been some work done through the likes of Tech UK and the FCA's Sandbox to demonstrate the capability of digital identity. Again, where we developed a specific pilot with UK identity providers and the European identity tech companies. So the digital identity scheme for the finance sector has a kind of very specific target of the government of a number of years, and a number of the large banks were encouraged to become IDPs in the Verify scheme, but only kind of Barclays took that up. The huge benefits of a digital identity scheme in the finance sector, and most of the European digital identity schemes are based on banks' ID, as like we've seen in the Scandic countries. So open banking has created, a significant amount of infrastructure required for digital identity schemes. And the advantages of this for consumers is that, it reduces the friction that they would need, that they have to go through. And if customers are going through a home buying and selling process and they get an identity that allows them to get a mortgage for £200,000 or £600,000, whatever it might be, about how they could reuse that same identity to purchase other financial products and services which they're going to need through that process. So the interoperability between the two schemes is going to be absolutely key. And for the financial institutions, what it starts to allow them to do, now they've been trying to develop their own trust framework for quite a long time, but this can potentially give them an actual working model of how a trust and reliance framework could actually work and will work, so that they could actually start to use this. So the consumers coming through that purchasing process are just carrying on. They're just still using that identity, and makes it easier then for the financial institutions to service those customers. And it also helps to tackle low-level, or certainly initial areas of things like property and mortgage fraud for the financial institutions as well. So consumers coming through that process. So it has operational benefits for the financial institutions as well.
So the project is starting off today. Kate, what's your involvement been from the home buyers and sellers group in the project?
So the job of the home buying and selling group is really to try and bring as many people together from the start of the moving process to the end. And to be honest, we've been really rubbish at doing that in the past. So from my view, what we don't do in the home buying and selling process is we don't pass the customer smoothly between us. If you think you work with lenders, you work with brokers, you work with agents, legal companies, surveyors, removal companies, search industry, etc., because we've not sat down and talked to each other, and because we've not really engaged, our systems don't necessarily talk to each other as well, that means there's a massive duplication process for the consumer, which is intensely frustrating at a time when they're moving, which, bear in mind, means they're having a baby, getting divorced, getting married, somebody's died, they're in debt. So they're already in a high stress state. And when I think of any change that we're looking at, I consider those people in that stress state and how it's going to impact them. And just to kind of, so everything we're trying to do on the home buying and selling group is say, and this is where Stuart's been great, we now have a group, we have a group on the digital identity, which means we're involving everybody from day one. So it's not the government pushing an identity rules, if you like, onto our sector, which might work for lenders, but doesn't work for the legal professional, doesn't work for surveying. What we're looking at doing here is making sure the framework that we have is compatible with everybody. And the end game for us is really making sure that for the consumer, when they do, when they have to prove their identity, which of course is a must, they do it in the most consumer-friendly way possible. And I have to say, having been through that process, I'm just selling my mum's home at the moment, it's been rubbish. I can only describe it as rubbish and frustrating, partly because, and I think these are the practical things that I think we forget, that I think is really important to understand. So the reason we're selling my mum's home is she has had to go into a nursing home. And one of the reasons she's had to go into nursing home is she has very arthritic fingers. And you might think, what on earth is she babbling on about this for? Well, that's important because she can't press buttons and she can't sign stuff. So even though signing bits of paper is a nightmare, but even the digital identity process, which was better, I had to go to a home, and obviously we're doing COVID as well. I had to have a carer in between the two of us, making sure we were 2 meters apart. We were all hand sanitizing like every second. And I was having to put mum's details into the identity check. I was then having to wait for a code to come back. I'd had to make sure I'd brought Post-its with me. Don't forget, we were doing this outside. We weren't allowed to meet inside. Put the number on. Then the carer had to stick that Post-it to my mum's chest. And then I had to take a photograph of it to prove her identity. Now, actually, that was better than a paper process because that was hard. And I have LPA with mum, so that's fine. But on the other scale, the really interesting thing, and this is where we have to get this right to make sure this compatibility from every sector is incredibly important, because my frustration is I did that identity check for my legal company. The other legal company that was representing the buyer is now querying my identity. And the reason for that is when we bought mum's house, I was married. So it was bought in my married name. That was on the land registry. Now I appear as Faulkner. Well, we don't know who you are, she says. And the fact that the legal company that I was working with had done the identity check, known me for years, didn't matter. But we all forget as well, I have to say, going through a divorce is not a nice thing. And every single piece of paperwork that I've had to deal with, it says Kate Faulkner, brackets, formerly Bell. And I have been reminded of a daily basis for the last 2 months of a really torrid time in my life. And I know why it's been done, but you kind of think, and I know this sounds a bit arrogant, I'm on the BBC every flipping week. You only have to watch the telly to see I am who I am. But this questioning of my identity was actually very stressful for me. And the fact that my legal company can't assure the other legal company that I am who I said I am, particularly as they dealt with the divorce as well, is intensely frustrating. And so that's just between two legal people. So now you expand that out to everybody else. This is where these things are incredibly important for everybody to get involved with, but mostly to understand that end person and make sure that you don't have to go through the relatively traumatic experiences on the ground. And that's what this is all about. And I think sometimes with regulation, that the person and the life that they're going through and what's happening to them is completely forgotten. And so that's really what I want as the Home Buying and Selling Group. That's our job, to make sure this goes, but it's done in a way that puts consumers first.
That's really interesting. Thank you. Stuart, who's going to, if the finance sector were to introduce such a system, how would the identity trust scheme actually work? How would it operate? And what are going to be the challenges for the introduction of a system throughout a very complex commercial chain?
Yeah, it's a good question, Sue. Thanks for that one. I think, open banking has created a significant amount of the infrastructure required for digital identity. For a digital identity scheme, and I think it could be developed to support such a scheme. The rules for such a scheme could be determined, or would be determined, by the industry, but would sit within the UK government's trust framework, which is currently being developed by DCMS, and they're going out to do a second consultation just, I think, later this month, it is. And they're looking at doing a project next year, trying to test case it. So I think the scheme rules, though, would not differ significantly from the rules for this scheme, as interoperability between schemes is obviously going to be a key deliverable of DCMS, but they need to allow each vertical sector to develop their own scheme. And I think use of terminology is quite important here so as to avoid confusion. Whilst DCMS are developing a digital identity trust framework for the UK, each sector will not be develop their own trust framework, but their own scheme. Yeah, hopefully that will make sense. So if I use the word scheme, that's what I mean. I think that's quite important to avoid confusion. So the scheme rules would not differ significantly from the rules for this scheme, as between schemes is a key deliverable of DCMS, and which we intend to ensure is established within this scheme. So in particular, we intend to establish how the identity verification standards adopted for this sector align against the 5 MLD and the JMLSG guidance, and with the rewritten rules of GPG 44 and GPG 45, that should, GPG 45 have been extended out a bit more, should hopefully make it a bit easier. But combined with that, you've then got land registries work around, you know, they're opening them up in a greater use of digital, and even things like digital signatures and things like that. So there's, sadly, COVID has accelerated the requirement for all this, so has pushed us all down the same route to say, right, we really have to do something now, rather than just the talking about it. And so what we're seeing happening is absolutely wonderful, is engagement. People are starting to work to come together more because the business requirement is there. So that's the sort of kind of challenges I see that. The legal framework around this is going to be quite complex, because you've got all the different regulators who have a history of managing and running their own regulation and schemes, and some have punitive measures, some don't. That needs to be realigned. It needs to be realigned between all the different types of regulators. And if you look at within home buying and selling, I go to an estate agent who is supervised by HMRC and National Trading Standards. I go to a conveyancer who's regulated by CLC, or it could be the SRA. I'm then dealing with a mortgage intermediary, and then I've got a mortgage lender. You know, all those different regulators around it. So that's one of the biggest hurdles and barriers, is getting people to come together, which, you know, from our project, you know, we've got the 10 legal regulators and supervisors engaged in the project. We've got the eight financial regulators engaged in the project, the 4 government departments, a number of relying parties, and 19 identity providers. And I think that's a great example of how this is going to be achieved by people just coming together and just working together and say, right, we've got to really do something. That is one of those biggest barriers, is just getting people to come together. Because I think the understanding is there about the requirement behind the regulation. And I think that's the biggest challenge, yeah, the alignment of the different regulations and coming together. There are precedences of it in other countries, some of our neighbours in European countries, so we don't have to go far to look at how it has been done, not how it can be done, but how it actually has been done. Hopefully that answers your question, Sue.
Yeah, that was great. It was a bit of an alphabet soup going on there. So can I just ask a little question about anti-money laundering? Because I think that's something that people will really... Does this project actually ensure that not everybody has to do their own anti-money laundering checks? Or is it something where if someone has done it previously, then you've only got to make sure that what's been done is up to date? So if there's been 6 months gone by or whatever, you might then need to think about it.
But this is the key thing about it, is to ensure that we build a trust and reliance framework. So for the consumer, they only have to get their identity done once, and then that can be shared with the relying parties through the process. And with the realignment of regulation, it then means I can rely on someone else's identity assertion, and that's key thing. I think what we have to be careful about is that this is not a lifelong digital identity that we're talking about. This is an identity that can be used for this transaction to the end of the transaction. Now, we have scenarios where if your driving license, for example, is 1 day out of date, or your passport is 1 day out of date, most people, a lot of organizations, if you use that for identity, will reject that because they'll say it's out of date. But it's your passport. Nothing's actually changed. You are still the same person as you were yesterday when your passport was not. So things like GPG 45 allow for that. I think it's a 6-month period within that. So yeah, it's about taking that one identity and being able to, the trust framework around it and the reliance to be able to share that with various parties to use and trust and rely on it.
That's really helpful, thank you. Can you also give us a little bit of an indication about who's going to be providing the governance and accreditation for the finance sector for this scheme?
There's a number of ways that governance can be implemented. A typical model is the creation of a not-for-profit organisation supported by representatives from the sector or from the industry, not just the sector, from the industry. So UK Finance were looking to take on this role of governance, and we would expect them to continue to be interested as a representative body in the sector. And it could be that various representative bodies come together to create a joint body to oversee such a scheme. A key aspect here is to engage specific expertise to develop the scheme. There are schemes out there like T-Scheme. I'm not sure if you've heard of them, that have been used that was used during the Verify days and looking at the governance frameworks there. But I think that's where it's going to have to come from. It's going to come from those regulators or representative bodies to create an accreditation scheme around that would then provide the governance around the sector for that. And again, that's where we see if there's an alignment of regulation and standards, it'll be easier to govern, or there'll be the governance around it will be a lot easier to manage and implement.
Thanks, Stuart. Kate, do you think such a system can be properly secure, and what will the framework and the scheme have to do to make to give customers the confidence to allow the sharing of data between different organisations?
I think I hope so is the honest answer, because that's what you've got to believe. And I also think that we've seen some terrible fraud cases going around, and anything we can do to make sure that that is stopped. I mean, I've had cases where people contact me and they want to sell their buy-to-let, not realising somebody actually sold it 3 years ago. And cases like that. So we really need to up our game, if you like, and this is a perfect opportunity, I think, to do it. I don't think there's such a problem getting the security side, because there's a lot of very clever people out there. I think the most important thing is getting this alignment, coordination and trust between all of the parties. And it goes back to what Stuart says. One of the things that we're finding now, we're kind of really starting to have some fantastic conversations between everybody in the home moving sector, is that the way that certain things are developed. So the handbook, for example, we're finding that there's things perhaps in the handbook that conflict and cause problems later down the line that nobody perhaps thought of with somebody else's regulation. What we need to try and do is make sure that those things are much more aligned, and then make sure they're obviously in the consumer interest. And the amount of work that's got to go behind this is enormous. But I think that the trust side of things is something much more for the industry itself, as to trust each other. And we don't have that yet. Lenders like to blame legal companies and surveyors. Legal companies love to blame the estate agents and complain about their fees and everybody else. You'll get agents saying, don't get a surveyor, get a builder, which is a terrible piece of advice and should never be given. And then the poor old removal guys at the end, nobody really's ever cared about that industry and the fact that they have to do ridiculous turnaround times, and nobody's ever thought to ask them how we could change the chain further up, so that they don't have to become, and I mean this sincerely from talking to people, mental health specialists on move day, because people are tearing their hair out at 4 o'clock in the afternoon because they're sitting outside and the people indoors still haven't moved. So sort of really drawing this out, the consumers, I think, have much more trust in technology than we as an industry have trust in each other. And for us to build that consumer trust, actually it's our job to make sure that systems like this are implemented so that the consumer only has to do it once and everybody's happy to accept that somebody else has done it. So for example, I get very frustrated. I always use a surveyor when I buy a home, and I get really frustrated that a lender will not accept my survey, and that I therefore have to get an extra valuation. and I don't want to upgrade from the lender's offering, because I've lived where I live for 15 years. I know the good surveyors in the area and I want to use them. And for me, that's in better interest for the lender. But there is this lack of trust that exists, and that holds up, I think, delivering a good consumer service. We're all very happy to accept a property MOT from somebody that's trained for maybe 6 to 8 weeks. But seriously, we're not happy to accept a survey from somebody that's trained for 5 years to do that, that's RICS or RPSA member, etc. And we've got to learn the lessons from the lack of trust and the problems it causes now, to make sure that when we introduce this framework and the way that we do it, there is no trust problem between everybody. That's the success. The consumer will be delighted, because at the moment, to buy or sell a home, you've got to fill in 38 pages of A4 and answer 38 pages of A4 questions. And a lot of that is duplicated. We know with the work we're doing on the buying and selling property information form, we've reduced that down to 14 pages, but it's still 14 pages, and that's a lot. And we've got to make sure that the answers that everybody gives on that information are everybody else will accept, and they're given from good data sources. We're working on that, and that applies exactly the same to the identity side. So I actually think consumers aren't our problem here. It's ourselves that are the issue. And that's what we've really got to make sure happens, is this trust and this alignment, as Stuart rightly says, between the regulators, because that hasn't always happened to date.
Stuart, did you want to come back on that?
Yeah, I'd like to build on that, and I think Kate is absolutely right, the trust element. And I think as well, what's happened now is a scheme like this as well to help build that trust, because we have this history of lack of trust between sectors, and that the surveying example is such a good one. I can get a survey done, but my mortgage lender still dictates that I need to get another survey report done. Why? But when we're looking at sharing of data, our personal credentials about who we actually are, this scheme actually is very secure and helps towards reducing of fraud for the system. And that's what the money lenders, if I may call them that, require the most, because obviously they don't want to lend money to someone who's going to run off with it. And also for the solicitor or conveyancer in the process, they carry that liability if anything goes wrong. So this is really important for their trust element. So I think the use of government standards doesn't just cover identity verification, but also the way a scheme is operated to ensure higher levels of security, to help build in the legal trust framework. You've got the emotional trust element, but when it comes down to this, there's the technical legal bit around it. So the use of strong customer authentication linked to strong identification provides high security. And to give you an example of that, we had our first working group last Friday with HMRC, the NAAA, National Trading Standards, and some of the estate agents. And we were talking about authentication and trust. And what I find particularly interesting there, coming from the two main estate agents, and these were, one's an international estate agency, the other's a national one, they were both requiring now facial recognition. So this bringing in this issue of biometric, which for me was quite a big surprise, because I haven't heard estate agents talking at that level of security and trust before. So this is quite new. So I think this whole security bit is seen that where there's a single proof of identity as well, reduces the friction points and the weak points. Because if there's multiple identities taking place, how can you trust different ones? Because there's so many going on, you've got a chain. And as soon as you have a chain, it's weak. Whereas if you have one, you have an increased security and strength in that. So what we're not talking about here is, whilst the consumer only gets one identity and that's shared with the different relying parties through the process, we're talking about the identity providers are actually going to have to up their game, and all of them start to improve their identity checks rather than all the various levels we've got just now, so that the mortgage lender at the very end can actually trust on that identity and the security elements of that identity and how the identity is actually shared through the process. That's the next big part to work through. So, you know, who's that identity gone through, who's connecting it, and who's controlling it, and then who's consuming it at the end. So there's also the question of the identity of the consumer of that identity. So is that person in that mortgage lender, does that person have the legal right to look at that full person's identity credentials? So hopefully that kind of builds on that.
Can I just ask one further question around identity? And this is sort of obviously around sort of company purchases, because obviously buy-to-let is a huge part of the industry, and it's not anymore sort of someone buying one extra property. There are portfolio landlords, and how do they fit into the whole process?
Well, as we know, landlords have to verify the identity of their tenants, but they've also got other checks. There's other checks that go behind that. So it's going to be really, really important for landlords and how they, especially in the private rented sector, and I'm sure let Kate add onto this as well. But we've seen with work that we're doing with one of the local authorities, how they're looking at this scheme to deal with the private rented sector in their borough to check the identities, not of just the tenants, because obviously the tenants they're providing services to, and that determines eligibility, but also then it's the landlords, the identity of the landlords. And we know around AML regs there for landlords or estate agents as well, who are dealing with landlords who I think is it making a profit of €10,000 a month? Where there has to be checks on there. So I think this opens up, if we're clever about this within this project, what we should be looking at is not just the home buying and selling process linked to an individual buying a property, but it's also to the landlord, the professional landlord, or to the person who's buying a couple of properties as part of their pension portfolio. But then it also brings in the public sector and social housing in terms of how they're doing this, because people do move between social housing and private housing. Not a huge sector, but there's still an issue there. And then we've also seen around property fraud in the social housing sector, where people go on housing waiting lists, where they're applying for multiple properties. And in a place like London, I think on right to buy, you can get about £107,000 discount on a right to buy. That's a very good business case to commit fraud, to get yourself onto a number of waiting lists in a borough. And there's a great example of boroughs not working together and not sharing the information. And then the mortgage lenders are trying to deal with that, because they'll be dealing with people with the same person but with multiple identities applying for the mortgages. So I thought, Kate, if you've got more to add on that one.
Yeah, I think so. Interestingly, obviously in Scotland, we've got land, and Wales, we have landlords having to be registered. So there are some good ins, if you like, to finding out if somebody is claiming that they're a buy-to-let landlord, but then they want to apply for a mortgage, etc. But they perhaps haven't got their registration, things like that. So there is a good opportunity here to make sure that landlord is doing everything that they can legally. And we know, certainly, although I'm not a massive fan of licensing from boroughs, I think it was right for some of the boroughs at the time, but I think it's an outdated method now of trying to rule the private rented sector, particularly for HMOs. And we've come up with a much better scheme, which is a requirement for a property MOT, in our humble opinion, on the Lettings Industry Council, which is the opposite of the Home Buying Selling Group. So for me, anything that increases the amount of information and gets that identity check from a buy-to-let portfolio landlord, or even just an individual one, is better for HMRC's purposes. It's better for the local authorities' purposes, to make sure that we can do enforcement well, because the failure in PRS at the moment is that the good guys are constantly penalised for doing all the right things financially, whereas the bad guys can get away with it on a daily basis because there's such a lack of enforcement. And all we've done is introduced over the last 20 years lots of rules and regulations, including licensing. But where I am in Nottingham, for example, I think it's cost £10 million worth of money to get landlords licensed, and so far they've issued, well, the last count was about 417 licenses out of tens of thousands. So this is not helping tenants, whereas actually coming back to something like this, if those landlords have been, their identity has been much more carefully checked and verified, that could have this lovely knock-on effect of making sure that enforcement can be dealt with better, and that we can and that HMRC gets the money it deserves, because it knows very well that it's not getting all the money from the private rented sector it should do. So that could be a real positive.
Thanks very much. Stuart, this is just one of many schemes that are being drawn up. Is there going to be significant interoperability between this scheme and, for example, a similar scheme for consumers who wish to become investors?
So one of the keys to success of something like this is interoperability between the different sectors. So you're absolutely right. The DCMS, as I said at the beginning, trying to develop a policy for UK PLC, and for those of us working in our different sectors, verticals, have to ensure about interoperability. So we're really happy with this project. We've got engagement now with people who are actually doing work in the finance sector. And they're doing, for example, gap analysis within the finance sector. And this is, fortunately for us, they've seen this as one of their big gaps. So what you've got are different people running projects, and we're all starting to engage with each other, because whilst we're all interested in just our own vertical, we need to look at the interoperability that goes between the schemes. And that's going to be really key. Otherwise, you're still faced with the scenario that the consumer has to still get their identity done for home buying and selling, so that's fine. And then they want to go into the casino, and then they have to go through another identity check. So we've seen gambling have been working on this for quite a number of years, but they've only been focused on proof of age and proof of funds. That's all they really need. Or we've had alcohol, which is really a proof of age, really. That's all they need. And then you've got it in the finance sector, or I'm dealing with my lawyers on a particular transaction just now. They've been my lawyers since 2007. I've still had to go through an identity check with them again. But they already know who I am, but I've already got an identity that I've done recently for something else. Why can't I use the same identity, that friction? So the interoperability bit, I think, is potentially going to be the biggest challenge moving forward as each of the verticals start to develop their identity schemes and how we align those to ensure interoperability. There's absolutely no reason why each sector doesn't have their own identity scheme, because they need to, because they've all got different regulations and requirements and business requirements, and they deal with consumers in different ways when they're onboarding consumers for their products or services. But that interoperability bit is going to be really key. And I think where this is the role of government, I don't know if you saw Matt Warman's MP's paper that came out a couple of days just last week. If I can just quote from it, the role of government in this is going to be absolutely critical. The UK government has a vital role to play in setting the regulatory standards and liabilities for digital identity services, and it must support the creation of a fully functional digital identity marketplace across both public and private sectors. So government's role in this is really, really important. I think we're starting to see now with DCMS policy and the way that they're approaching this, I'm feeling quite confident, and again, that warm, fluffy feeling inside that we can achieve that interoperability now. And it goes back to, sadly, COVID has accelerated this requirement and just brought it forward by a number of years.
Thanks. I think that's sort of quite interesting now to sort of see just how fast things have moved. So we've seen a lot of firms move away from wet signatures in the last 9 months, which would have taken several years to go through. So hopefully now we've got momentum from various parts of the process. So my sort of final question to you both is, how can UK Finance members contribute to implementing this project? What would you like to see the lenders do in order to make all of this work better? Shall I start with Kate?
Yeah, talk. Come and talk to us. If I'll be sort of slightly honest, we've had some good engagement on the lending side on the home buying and selling group, but not enough. And we're not trying to. We're not a power organisation. Nobody ever gets paid to do what we do. We ask, the only hard thing you've got to do is when you come to the home buying and selling group, we ask you to leave all your agendas at the door, and we just ask you to focus on the consumer and getting it right. We don't want to step on anybody's toes. That's not what we're about. It is all about, do you know what, if you want to change something for the better, if there's something in the home buying and selling process that you hate, and that might be the legal industry, that might be agents, come and tell us, come and talk to us about that. And we will basically put working group together, and we will find a way to make sure we can move things to a better place, because the better we all work together, then the better we can make it for consumers. We're never going to get consumer trust unless we start trusting each other. The only way we trust each other is by talking to each other, sharing our frustrations. And I'll tell you now, I think this point last year, I was thinking, oh my word, what have I done? I've opened up a huge can of worms and I don't know how I'm going to deal with it. And actually, at the start of COVID, it was very difficult to get everybody together. But then by May, we were producing guidance for the whole home moving sector, so that we can open in time. We had no idea it was going to be so quick, but that meant on the day that the market opened, when I think AMHCLG's advice for home moving came out at 11 o'clock that day, by 5 o'clock, we had all the home moving guidance from everybody from lender to removal company, which was all consistent. The sectors then could go off and do their own guidance in line with their regulation, but we knew that everything we'd put forward was all still okay. And what we then did is we had 3 consumer checklists for the key things that they needed to do. And the reason for going through that and explaining that is that the only way we will get identity right is not by people sitting on the sidelines throwing stones when it's done. It's by coming in and telling us that idea is rubbish because of this, and we don't think it's going to work because of this. And then people like myself saying, that's great, but do you know what? That's going to be an absolute pain in the neck from a consumer perspective for this reason and that reason. And that's what we do, and that's what we're good at. And it's starting to work. We've shown it on guidance. We've produced a pledge recently. I think that as a home moving sector, we deliver so much to the economy. That's been recognised for the first time this year, that if we can all start working together, wouldn't it be lovely in 2 or 3 years' time to have the smoothest of home moving processes, not just for consumers. It's never going to be stress-free because they're moving for a massively life stressful reason typically. But wouldn't it be nice for your staff to be able to come in each day and love moving people and love Fridays rather than hate Fridays for completion nightmares? That is in our grasp, but it's only by engaging now with the work that Stuart and the rest of the team are doing on the identity that we need your input, we need your expertise, we need you to tell us what's wrong, what will work and what won't work, or what other little things that we could do that would make such a massive difference. And it is just that power of talking and engaging. So that would be my plea. Talk to us, help us get this right. We can't do this without you. And we don't want to do this without lenders. We really want you to be involved. So please get involved. This is a massive, massive opportunity for everybody.
Stuart, what can we do to help?
I'd concur with everything Kate says there. It's so true. And I think something like home buying and selling, for that percentage of the population that go through it, we all experience it. And by God, don't we love telling a good story about our home moving and selling experience and how well it went or didn't go or whatever. Unfortunately, we only hear about the bad ones, and that comes out quite a lot. But it is something that we all actually understand. In very simple terms, we all know about home buying and selling, so it does impact us all. And that creates a platform for us all to just come together. And what this project has demonstrated, and we are demonstrating is great, is just by getting everyone together, we can achieve something quite, hopefully, monumental here, because this project will deliver the first UK trust framework within the home buying sector in the UK aligned to DCMS policy. That will create a template for other sectors to use and share, because that's what this is a publicly funded project. So it's there to be shared and taken up by other sectors should they want to. So having that courage to say, okay, you've done it. Can you give us a bit of advice here, or give us because out of this will come a rule book for people to use, an operations manual. And that means someone from the finance sector or the gambling sector or whatever can take that rule book and use that. You know, you're asking about how do we get people from UK finance members. It's just, you're already engaged within our financial regulatory group, and it's getting that message out to your members. And even indeed, at some point in time, we will need a working group, because very importantly, we want to bypass the regulator and get to the people on the coalface, because it's the people on the coalface that give you the slight little nuances and differences from what the regulators might say, to say, well, I know the regulator says that, but the reality is this is the problem we've got. So that engagement would be fantastic if we can get that engagement from UK Finance, and other regulators like the FCA would be a very good one as well, you know, because of the regulation that goes around it. So, and I think, you know, we've seen what DCMS came out with when they produced their report a few months ago. The #1 case study for the UK economy is home buying and selling. So that's how important this sector is to the economy. And it does cross sectors, doesn't it? It goes from the estate agency to the legal sector, to the money sector, and to the consumer. It affects so many different people. And we've seen that in the complexity of some of the working groups that we've put together for this project. We're moving different regulators between working groups, just simply because of the complexity of this group. So keeping everyone working together, and that engagement, Sue, is really, really important for us.
Well, we are looking forward to working with you as this project develops. I think it's a very exciting project, and I think a lot of people are going to get a lot of benefit out of it. So I'm really hoping that it will sort of move along swiftly and usefully.
I hope so too, thanks.
I think we're going to be drawing this now to a bit of a close. I'd like to thank Kate and Stuart very much for their very engaging discussion this morning. And I'd like to thank everyone who joined us today. Just a reminder that the Digital Innovation Summit 2020 is running between the 2nd and 20th of November and is free for UK finance members and associate members. The wide variety of content available during the summit is made available online every day during the summit, and so view the agenda page every day and set yourself some reminders. Every day, fresh content will be available to all delegates, and we welcome you engaging with us as much as possible. I hope you can join us for our final session in the mortgage technology stream, which takes place on Thursday, the 19th of November. It's discussing what will vulnerability look like in 2021. The financial sector has had a long duty of care to protect those customers who experience financial difficulty, with the pandemic bringing this issue to the forefront as never before. With the landscape of financial difficulty expanding and intensifying as a result of an economic downturn, this panel will review what the priorities are for protecting vulnerable customers beyond 2020. I hope you can join us. Thank you very much, everyone, and see you all soon. Bye-bye.